Hi guys, this is Dr. Sadasivam once again with you. Why we have been observing for the last 2-3 days this week, Nifty has been following a winning streak. That's a very clear indication, and we have already discussed in the last few videos that 16,500 is a range which if Nifty breaks out, then that's a very positive sign and it will have adequate momentum to achieve 17,000 levels. But guys, there are lots and lots of challenges overlooking us. We are all aware that there will be a MPC meeting of RBI next week. That if you remember, last time also I explained in one of the videos that they had increased by 40 basis points, but this time is it going to be hawkish, dovish or neutral accommodative stance? We really don't know, but the experts think that there will be an increase of approximately 25 basis points, and I've explained that in one of the videos that it's going to be a synchronized action. More than 20 countries have increased the interest rates, and we will be discussing a lot about all this. But before doing that, let's review the past 1 year which has gone by, just to have a handle to understand the macro aspects. Lot of people are saying that whatever challenges we face today in terms of commodity price, inflation, etc., after the Russian war. But let me tell you, all these problems started last year, May, June. There is something called as a leading indicator, which macroeconomists are able to spot those things out, and they will connect all these dots and they will make a proper picture out of it. Even then, a year back, signs of moderation have already started. You might be thinking that the market was going up at that time, because we are talking about a time when your market was going up and up and up. It was reaching 18,700 levels. I'm talking about last October. It's quite possible that in the month of October, the markets reached 18,700, but there have been lots of trends and most people were questioning this. How is it possible that the market Nifty is going up when the economic indicators are not good? Guys, understand there's something called as a momentum. If you're pushing a vehicle from behind, even if you stop doing that, it will keep moving for some distance, because that's what is momentum, and we have already read all this in physics: force, mass, acceleration. But that doesn't mean it will cross 80,000, 80,700, then 20,000. It's not like that, guys. Some people get overexcited, which we call as irrational exuberance. Overexcited, people were jumping like Nifty has become an adult. It crossed 18,000. Sensex has crossed 60,000. It's become a senior citizen, and so much of tamashas and irrational exuberance was going on in the market. And if you see from the last October, from 18,700, it has fallen down to 15,000 levels. I always use this example of the Nifty jumping from a helicopter without any parachute. But yes, in the last 1 or 2 weeks, the Nifty is slightly improving. If you look at the situation since last July, the commodity prices were going up. Price inflation started from there. Crude oil also. Initially it affected the consumers, and then later it started affecting the corporates also. And over and about that, I'm talking about the last year. Please remember that we also had this COVID problem, the second wave, third wave, Delta, Omicron, all these problems. We were beset with lots and lots of problems during the last year. And today, if you think the CPI, which is the consumer price index, it is on the threshold of crossing 7%, guys. Don't talk about WPI, it's crossing 15%. I remember I shot a video last year. I was expressing concerns that in terms of WPI is achieving 2-digit now. What is 2-digit? It's touching 15, 16, 17. There's another statistics which I would like to tell you, which is shared by Venugopal, a very trained economist. I respect that guy. And he explained that he did a survey of around 200 commodities, and the price inflation between the last year and this year, he quoted a figure, you will be surprised. He says, you have to spend $100 billion extra to buy the same material which you explained last year. He didn't give too much of explanation, but this figure, $100 billion, seems a lot sensible going by the inflation. And this inflation is affecting the stock market, because I am more bothered about the stock market than anything else. Guys, today, I think for the last 1 or 2 weeks, it's slightly raising its head, and it's somewhere approaching the 16,700, 16,600. But in that context, please don't leave the context, because in between I will be putting a lot of masala. I'll be tangentially going off a little bit, and that has always been my style. And when I take up a topic, I slightly deviate from the topic, right? Whether it is current events like this, or even in my corporate trading programs, I slightly deviate, but that's required, right? Now, coming back to the problem, the interest rates, the MPC meeting of RBI next week, they may raise. Generally, we feel that there will be an increase of 25 basis points, but no one is very sure. And over and above that, your crude oil is also on the way up. It's now today selling at $120 billion. But yes, there was a news item today that OPEC will be increasing its oil. US will increase its production of shale oil. Slightly it might come down, but for the next 5 or 6 months, there will not be any reasonable fall that can really save the economy. And of course, nobody can say with any degree of surety as far as the crude prices are concerned. But there is one consolation for us, because some of the headwinds we had during the last year in terms of your lockdowns, your global supply chain disruptions, your second wave, your third wave, your Delta, Micron, those problems are not there this time. And therefore, we can expect the market to be a little bit supportive, and we are going through a supportive phase. But inflation will keep on going. And over and above that, we were all hoping for 8%, 8.5%, but all that has come down today, 7.1. I may be smiling. It's a cause of concern. But one thing we should remember, the extent to which the whole world has been affected, the whole lockdown in China, the global supply disruptions, even this much if the government has managed the problem, the government deserves our salute, guys. Not 1,000 salute, even 2,000 salute is not. Please give 5,000 salutes to this government, right? As far as the stock market correction is concerned, there's nothing much to fear. I've exaggerated a little bit, and 18,700 and all that. Here in India, the fall is only 10%. But if you look at the US market, people talk about these FANG stocks, they've all fallen 50-60%, guys. In India, nothing of that sort has happened. We have been a very resilient economy, and generally we are not very 100% insulated from the global developments. All our companies, whether you are Infosys, mid cap, small cap, they will be affected. Obviously, they will be affected if there is any issue in US. A lot of people think that IT is a discretionary spending, but guys, please understand. I will talk about it a little later. In India, also one thing we need to remember, the IT stocks were overvalued. The valuations have gone so high, 35, 40. What are you talking here? Whole world, the PE is around 9-10%. Everybody is going behind. One irrational exuberance and herd mentality in India. So valuations also went up, and that is also one of the reasons why the markets have corrected, especially as far as IT stocks are concerned. And last year, if you talk about everybody made money, guys. If you remember, during COVID it was 13,000, but then during COVID it came down to 8,000. But after that, when it started going up from 8 to 13 in 4-5 months, it reached pre-COVID levels. Remember March Modi ji was saying, Mitro, ghar ke andar ghus jao, wala plate bajao. You know, in 6 months, from April to September, we reached back those 13,000 levels. And after that, it started going up and up. We reached 18,700. I'm talking about last October, right? So, valuation. Everybody who put money, they all made money, and everybody started thinking about himself as Warren Buffett. You cannot expect things to keep on increasing at an increasing rate. It doesn't mean they have become experts. You know, all those guys are now crying. Their assets net worth has reduced. Kushi ki baat nahi hai, but you know, sometimes we can't be very serious also because good times are ahead. So to some extent, the IT valuations have gone up very high, right? Those of you who track share market in 2000, same thing happened, guys. .com bubble, remember that. Remember one thing about IT, there is so much of digitization happening in the whole world, and it is not a non-discretionary activity. We hear a lot of things. For those of you who are not aware of this non-discretionary, for example, if you have your sugar and onion cost cannot be reduced, because whatever is the cost, you have to buy that, because it is I would say these are non-discretionary. You have to buy them. But for example, you want to go for a movie, you want to buy a Pepsi for 300 rupees, 500 popcorn, they can be avoided. They are discretionary. But IT is part and parcel of the company. So it is non-discretionary. Remember that. So today every company is getting into digitization, cloud. It's a main part of the business, guys. You cannot make a sweet without sugar. Likewise, you cannot run a company without IT. So it is not a discretionary. Without IT, nothing can take place. So those of you who think that the IT stocks might go down, they will not. It's a misperception, and now is the time to buy IT stocks and see how IT stocks will go up. Today you look at the stock market, your TCS, your Infosys, even small companies like Emphasis, your what is that, KI, IT Tech, and all these endurance technologies, all those stocks are going up, guys. So what else have I left? I think most things. Let's talk about steel, because lot of people are saying what will happen in steel market, right? Let me talk to you a little bit about that. One thing we need to remember, that steel commodity prices, we will talk about it. The whole world is going through inflation, and all countries are taking steps, both monetary policies, fiscal policies, everything is being done to reduce inflation. So therefore, more price increases may not happen on the commodity front, please remember. So therefore, the steel companies may not be able to give good profits in the coming years. But that does not mean that the capex will go down for steel companies, because whenever you talk about capex, we don't have to look at those from a short-term perspective. Whenever you talk about these things, we have to talk about cycles, business cycles, because when you talk about cycle, it is not 3 months or 4 years, it's 5 years, 6 years and 10 years. If you remember, 2 years back, they were going through steel super cycle because there was a downtrend. Like for example, real estate has been down for quite a long time, and now there is an uptrend which is very clearly visible, and these are a lot of variables, moving parts. You have ferrous metals, you have non-ferrous, a lot of variables into the equation, but we can say with fair level of confidence that the prices will not go down also, right? So don't say that I am telling you not to buy steel stocks. The prices will not go down, because for all these companies, their cash balance sheets are very good. They have deleveraged a lot. Okay? And finally, one more important thing, we're going to talk about FII selling, especially in the last 8 months. If you look at the selling of foreign institutional investors, more than 3 trillion rupees, guys. 3 trillion money, right? But that does not mean that they don't have belief in the Indian markets. because whenever they do that, they do dollar denominations in terms of, whenever you have seen, whenever the crude oil goes up or the dollar value goes up, FIAs will take their money out. So therefore, it's not a big structural change, a little bit of a structural adjustment, a little bit of portfolio adjustments which the FIIs are doing, and once again they will come here with bags and bags of money to buy their favorite stocks like HDFC banks, etc. And if everything goes on well, on the same day next year, quite possible that I might tell you, saying that Nifty has already crossed 20,000, or maybe I would say Sensex has already crossed 70,000. There's no guarantee. Don't come to me and saying that we had put in money. No, this is an education program, right? But one can be very sure, it's not far. We will be crossing 18,000 Nifty very soon, and 60,000 Nifty also very, very soon. Okay guys, I hope you like this video, and this is Dr. Sadasivam signing off till we meet again. Bye bye, Jai Hind.